The landscape of new pickup truck pricing is on the cusp of dramatic change. Prices aren't just inching downward, they're set to plummet. It's not a fluke or a fleeting sale, it's a seismic shift born from strategic upheaval. Automakers are caught in a crossfire over supply piling up on dealer lots, electric vehicles reshaping consumer expectations, and luxury trim lines stalling in a stuttering economy. Suddenly, the golden era of price hikes feels shaky. Imagine waiting just weeks and watching that price tag slip to 3 to 5% lower, then gradually unwind further through 2026. It's a rare moment, a perfect storm where waiting not acting is the savvy play. This moment begins with the supply glut, factories churning out more full-size trucks than the market can absorb, dealerships desperate to free up inventory, and leases concluding in droves, sending more used models into the pipeline. Meanwhile, electric pickups offer a thrilling alternative: bold futuristic designs, instant torque, minimal maintenance, and the ghost of clean energy cool whispering in consumers' ears. Traditional gas guzzlers, especially in high-trim configurations, start looking bloated and overpriced in comparison. Add in the fallout from failed luxury experiments, premium price models that promised performance, comfort, and cachet only to deliver sluggish sales. Dealers sit on these rigs like paperweights. Those stuck with overbuilt, tabletop-priced heavy hitters are starting to blink. Internal memos whisper price adjustment ahead. Smart shoppers with a little patience and a sharp "I will be first in line" when that adjustment hits. It's happening quietly at first. Soft incentives here, minimal overlap there, but as the calendar flips toward year-end, the whispers become a chant. Retailers launch subtle markdowns, finance offers sweeten, and suddenly your dream truck slides within reach. And here's the key: this isn't a fleeting flash sale. It's a multi-phase correction. First phase, affordable trims and base models dip in price. Phase 2, mid-levels catch up. Phase 3, even the high-end beasts begin to soften as margin pressure mounts, and nobody wants to be the last to adjust. By the time 2026 resumes full production cycles, the market will look different. Truck buyers will be picking from a buffet of competitive deals. Dealers will be reluctant to raise prices again, having tasted the rush of clearing inventory. Meanwhile, EV pickups will inevitably climb in numbers and price competitiveness. If you're in the market now, you may want to hold off. Dealerships are already feeling the squeeze, and their reactions will be telling. For years, they've thrived on markups, limited allocations, and the psychology of scarcity, convincing buyers that if they don't pay today, someone else will snag that truck tomorrow. But when lots begin to overflow and floor plan financing costs pile up, the script flips. Suddenly, that same dealer who was firm on sticker price becomes flexible, adding hidden rebates, 0% financing, or even straight-up cash discounts just to move metal. They'll lean into trade-in bonuses, offering more than your vehicle is really worth, because they'd rather eat that margin than sit on an unsold $70,000 pickup for another month. Expect aggressive ad campaigns, holiday blowouts, and extended warranty sweeteners packaged as free to reignite demand. Behind closed doors, dealer groups will pressure automakers to slash MSRPs altogether, because incentives can only carry sales so far. When manufacturers hesitate, some dealers will start cutting deeper on their own, hoping to beat competitors across town before the race to the bottom becomes obvious to everyone. And as EV trucks creep into mainstream showrooms, dealerships will be forced to balance clearing out combustion models with proving they can sell electrics, adding even more urgency to the fire sale mentality. The first wave of discounts will almost certainly hit full-size pickups with bloated inventories and slow turnover. Think of models like the Nissan Titan, which has struggled for years to gain serious traction in the US market. Dealers holding Titans know that waiting longer only makes them harder to move. Next in line are high-volume workhorses like the Chevrolet Silverado 1500 and GMC Sierra 1500. These trucks are produced in massive numbers, and when supply outpaces demand, dealers can't just sit on acres of unsold trucks without trimming prices. Ford's F-150, the perennial bestseller, isn't immune either. While its brand power is unmatched, the sheer scale of production means any dip in consumer demand creates instant overstock. And for dealers, will have no choice but to sweeten deals. But perhaps the most vulnerable models are the high-trim luxury variants: Platinum, Denali, High Country, and limited editions priced above $70,000. These trims were designed for buyers chasing prestige, but in a cooling economy, fewer customers are willing to swallow luxury SUV pricing for a truck. Dealers will have to cut aggressively to make those move, because the longer they sit, the faster their value erodes. On the flip side, base and mid-level trims like the Ram 1500 Tradesman or Ford F-150 XLT will likely follow with discounts. Not because they're unpopular, but because they're produced in the largest volumes and are the backbone of fleet and retail sales. Fleet buyers, especially construction companies, are extremely price-sensitive, and dealers will chase their business with razor-thin margins just to keep trucks rolling off lots. And then there's the EV pickup factor with models like that. Ford F-150 Lightning, Chevy Silverado EV, and Rivian are 1T carving out mindshare. Traditional gas-powered pickups will feel even more pressure. Dealers will see EV interest rising and respond by slashing ICE truck prices to stay competitive, especially when federal EV tax credits start reshaping customer math at the dealership table. Automakers will not sit quietly while dealerships slash prices and risk devaluing the brand. Their first move will be to quietly roll out factory-backed incentives, cash rebates, subsidized lease rates, and low-interest financing programs to give dealers cover without admitting defeat on MSRP. This way, Ford, GM, Stellantis, and others can claim trucks are still worth the sticker price, while buyers feel like they're winning with exclusive offers. But as inventories keep stacking up, those incentives will escalate into direct MSRP cuts, something automakers hate doing because it signals to the market that the truck wasn't worth that price to begin with. Some manufacturers will try to save face by disguising these reductions as special editions or limited packages with slightly fewer features at a lower cost, letting them technically avoid saying they dropped the price. Others may lean on fleet sales, offloading thousands of trucks to rental companies and government buyers at steep discounts to quietly reduce dealer backlog. Automakers will also begin staggering production idling plans for weeks at a time to slow the flow of new models hitting lots, but the most telling reaction will come in how they adjust their trim strategies. Expect fewer ultra-luxury versions and more emphasis on affordable mid-tier trims because the high-end market is softening fastest. GM may rebalance Silverado and Sierra production toward LT and SLE models instead of High Country and Denali. Ford could pivot marketing muscle toward the F-150 XLT and XL, while Stellantis might lean heavier on value-driven Ram trims. All of this signals that automakers will have no choice but to bend, because if they don't, dealers will do it for them and brand loyalty could erode in the process. For buyers, this unfolding situation is nothing short of a golden opportunity, but only if you know how to play it smart. The first rule is simple: don't rush. Dealers thrive on urgency, telling you that the truck you want won't be here tomorrow, but when lots are overflowing, the opposite is true. Trucks will still be there, and in fact, they'll be cheaper the longer you wait. The best timing strategy is to target end-of-quarter and year-end sales events, when dealers are desperate to hit volume bonuses from the automakers. That's when discounts stack, deepest factory incentives, dealer markdowns, and hidden rebates all collide. Second, savvy buyers should focus on trims with the most inventory. If you see rows of F-150 Lariats or Silverado LTG sitting untouched, that's leverage. The dealer knows those models are tying up floor plan costs, so you can push harder on price. Don't be afraid to bring up competitors. Either mention that a rival brand is offering better finance terms, even if you're just testing their willingness to deal. Dealers hate losing a beer to the lot down the street, especially when they're under pressure to move metal. Another powerful move is to time negotiations around new model announcements. When Ford announces a refreshed F-150 or GM teases the next-gen Silverado, current tier models instantly lose their shine in the eyes of buyers. Dealers know this, and they'll cut deeper to unload old inventory before the new models arrive. That's when you swoop in, and don't overlook trade-in tactics. With used truck prices beginning to normalize after years of inflated values, dealers are padding trade-in offers to keep buyers happy. Get quotes from multiple sources: CarMax, online buyers, and local dealers, and use the highest one as leverage in negotiations. In many cases, the inflated trade value will stack on top of purchase incentives, amplifying your savings. For buyers eyeing luxury trims, patience pays even more. The $70,000 plus Denalists, Platinums, and Limiteds are sitting longest, and dealers will eventually start cutting into profit margins just to clear them out. If you've dreamed of driving one of these premium trucks but couldn't stomach the price tag, waiting a few months could make that dream attainable. Start by checking online dealership listings in your area. The more trucks you see sitting unsold, especially of the same trim, the stronger your negotiating power. Prioritize brands and models that show heavy availability, like Silverado 1500s, Ram 1500s, and F-150s in popular trims. Automakers update rebates and finance offers constantly, sometimes mid-month. Sign up for dealer newsletters and keep tabs on manufacturer incentive pages. A rebate that wasn't there yesterday could suddenly save you thousands tomorrow. And dash of dash month, end of quarter, and especially year-end sales events are when dealers are most desperate to hit volume bonuses. Combine that with slow seasonal demand, late fall and winter are prime buying times, and you'll catch dealers at their weakest before you even step on a lot. Get hard numbers for your current vehicle from Carvana, CarMax, and local dealers. Use the best one as leverage. If a dealer wants your sale badly enough, they'll match or even beat that trade-in offer and fall in love with just one model. If you want a Ford, get quotes on a Ram and Chevy too. Let dealers know you're comparing. Nothing lights a fire under a salesperson faster than the threat of losing you to a rival down the road. When you walk the lot, look for rows of identical trucks that clearly aren't moving, usually luxury trims like Denali, Platinum, or Limited. Those are costing the dealer money every day they sit, which means you're in the driver's seat for a deeper cut. If the deal doesn't feel right, walk away. With inventory high, the truck you saw today will likely still be there tomorrow, maybe even cheaper. Dealers hate to lose a hot lead, and more often than not, you'll get a follow-up call with a sweeter offer. Always ask about combining rebates, financing specials, loyalty discounts, military or first responder incentives, and even credit union promotions. Most buyers leave money on the table by not asking. A few minutes of persistence can mean thousands in savings. Get pre-approved with your bank or credit union before visiting the dealership. It not only gives you leverage, but also forces the dealer to beat the rate. Another area where you can save big. As soon as a refreshed or next-gen truck is announced, outgoing models lose their shine. That's when you should pounce dealers slash prices to clear the old models and make room for the new arrivals. If you're a beer looking at this shifting market, the biggest mistake you can make right now is rushing in blind. Dealers count on that. They know most customers don't come prepared, and they take advantage of emotion. But when you flip the script and follow a playbook, suddenly you're the one in control. Picture this: you walk into a dealership already armed with trade-in quotes from 3 different places, pre-approved financing in your back pocket, and a clear idea of which trims are sitting unsold on their lot. The salesperson quickly realizes you're not a casual shopper, you're a strategic buyer. That alone changes the tone of the negotiation. The key is patience. Trucks are not flying off lots like they were 2 years ago. Every passing month adds more pressure on dealers and automakers to sweeten deals. That means the longer you can wait, the better the savings. But patience doesn't mean inactivity. It means tracking, preparing, and setting yourself up so when the right opportunity hits, you can strike immediately. Watch for overlapping discounts. Maybe Ford announces a cash rebate, your local dealer throws in an end-of-quarter bonus, and your bank is running a special low APR offer. On their own, these are decent. Stacked together, that's thousands shaved off a new truck without even touching MSRP negotiations. And let's not forget the psychology at play. Dealers don't want to admit they're desperate, but the signs are all their rows of untouched trucks, manager specials plastered across windows, and salespeople following up after you leave the lot. This is your leverage. Don't be afraid to say, "I'm considering a Silverado down the road that's offering better terms. Can you beat it?" 9 times out of 10, they'll find a way. If you're aiming high, luxury trims are where patience pays most. Those $70,000 plus rigs are becoming the hardest to move, which means they'll carry the deepest discounts. The buyer who can hold off until incentives peak could walk away in a truck that once felt out of reach for a price that suddenly looks reasonable. Meanwhile, mid-level trims like the F-150 XLT, Ram Bighorn, and Silverado LT will likely see steady incremental markdowns, making them the sweet spot for buyers who want value without breaking the bank. The roadmap is simple: research, wait, stack, negotiate, and be ready to walk. follow that formula. And you won't just buy a truck, you'll beat the market at its own game. Industry insiders are already whispering that the price drops we're starting to see are not just a short-term blip, they're the beginning of a multi-year correction that could stretch well into 2026. Why? Because the forces driving these cuts aren't going away anytime soon. Automakers overbuilt during the post-pandemic surge, expecting demand to stay sky-high forever. Instead, inflation, higher interest rates, and shifting consumer priorities cooled the market. Now those trucks are sitting, gathering dust, and every day they remain unsold, costs dealers and manufacturers money. That's pressure that doesn't vanish overnight. If history is any guide, this cycle will play out in phases. Right now, we're in the incentive phase. Factories quietly piling on rebates and low APR offers to ease inventory. By early 2026, as more EV trucks hit the market and competition intensifies, we'll see the price cut phase, with MSRPs officially dropping to realign with what buyers are actually willing to pay. After that comes the stabilization phase, where pricing resets at a new normal, not the inflated highs of 2021 to 2022, but also not rock bottom. Somewhere in the middle, where buyers feel trucks are attainable again and automakers can still make a profit. But here's where it gets even more interesting. EV adoption will accelerate the decline in gas truck pricing, as Ford, GM, Ram, and even startups like Rivian and Tesla flood the market with electric pickups. Traditional combustion models will look less appealing at inflated prices. Buyers will either demand steeper discounts on gas trucks or shift directly to electrics. That forces automakers to double down on deals just to keep conventional trucks moving. The result, a competitive spiral where no one wants to be the last company holding overpriced inventory. By 2026, the truck lot could look very different. Rows of EV pickups sitting side by side with discounted gas models, buyers choosing based on monthly payment rather than loyalty, and dealerships bending over backward with aggressive offers just to keep traffic flowing. For shoppers, that means a window of opportunity unlike anything in recent memory, where patience and timing could save not hundreds, but thousands off a brand new truck. What this means for the future of the truck market is nothing short of a reset. For decades, truck buyers have been conditioned to accept the idea that prices only go one way up. Automakers layered on luxury features, pushed out ever bigger trims, and convinced customers that paying SUV money for a pickup was normal. But once prices start falling and buyers realize they can wait out the market for a better deal, that old mindset collapses, value becomes the new king, and brand loyalty starts to erode. If Ford won't give you the deal, you'll walk across the street to Chevy. If Ram doesn't meet your price, you'll look at a Tundra or even a newcomer like a Chinese or Korean entrant if they make it to US shores. That shift in psychology is dangerous for the Detroit 3 because loyalty has been their safety net for decades. Once customers learn to shop aggressively and play brands against each other, it's nearly impossible to reverse. EV trucks will only accelerate that cultural shift. Instead of obsessing over badge prestige, buyers will compare range, charging, speed, and cost of ownership the same way they used to compare horsepower and towing capacity. The emotional pull of "I've always bought an F-150" weakens when a Silverado EV offers better monthly payments, or when a Rivian delivers more features for the dollar. And when those EVs qualify for tax credits that gas trucks don't, the math tilts even harder. The long-term outcome? Automakers will have to compete on value again, something they've avoided for years. Expect leaner trim lineups, fewer ultra-luxury packages, and more emphasis on affordability and utility. Dealers will adjust their playbook to no longer banking on scarcity, but on volume sales and customer retention through service and financing. For buyers, it means the days of being squeezed at every angle are ending. The leverage is shifting, and those who understand the game will come out far ahead. The truck market of 2026 won't look like the truck market of 2022, and if you're willing to be patient, the winner of this transition could be you. Picture this: it's late 2026, and you walk into a dealership that, just a few years ago, would have greeted you with inflated prices, cocky sales tactics, and rows of trucks that felt just out of reach. But now, the atmosphere is different, quieter, almost cautious. Instead of being told you should feel lucky to find a truck at sticker price, you're being courted. Salespeople are quick to ask what payment you're comfortable with, what features you actually need, and how they can make the deal work. The rows of shiny new pickups are still their Silverados, F-150s, Rams, but instead of being untouchable, symbols of status, they're opportunities waiting for the right beer. On the window stickers, you don't just see MS or PS, you see dealer markdowns, factory rebates, and financing options already advertised in bold print. Trucks that once hovered in the $70,000 range now carry bright red Manager's Special, $59,995 tags, and if you hesitate, the salesperson leans in with the quiet assurance that there's room to go lower if you're serious. Across the lot, you spot an EVE lineup: Lightning, Silverado EVE, Ram rev priced aggressively to compete, many with government credits baked into the deal. You realize you're no longer deciding between buying now or waiting, you're deciding how much you want to save by waiting longer. The power dynamic has flipped. You control the negotiation. Maybe you've come armed with pre-approval and trade-in quotes. You drop the number you're comfortable paying, and instead of laughter or a flat no, the salesperson excuses themselves to talk with their manager. Minutes later, they're back, closer to your number than you expected, willing to add an an extended warranty, free maintenance, even accessories just to close the deal. For the average beer in 2026, this is what the dealership experience will feel like: not a battle to avoid being overcharged, but a game of how much value you can extract. And that's the clearest sign of how far the market will have shifted, because once truck buyers get used to this new reality, there's no going back.